Hi, I'm Joseph Rand with homebuyertaxcredit.com, your best resource for information about the homebuyer tax credit. Today I'm going to talk to you about three creative things that you can do with the homebuyer tax credit. Those three things are, number one, you can use the homebuyer tax credit to get started in investing. Number two, you can use the homebuyer tax credit to help somebody else buy a home, including a parent helping a child buy their first home. And then number three, a couple who's looking to downsize can use the homebuyer tax credit to downsize to a smaller home. We're going to cover each of those three things, but I'll just remind you that if you do have any questions about the homebuyer tax credit, check out homebuyertaxcredit.com. We have all the information you could want. We have an overview, a frequently asked questions section. We go through a bunch of different scenarios. We have a blog that keeps you updated of any changes or any news stories. We got a news feed. We have videos like this. And finally, we have the eligibility test, which in about 5 minutes you answer about a dozen questions, and you go through the whole thing, and it's very thorough and very rigorous. And at the end, it can tell you whether you qualify for the homebuyer tax credit or not. But let's get now to the three creative ways you can use the homebuyer tax credit to either invest, buy for somebody else, or downsize. Number one, investing. Well, you may say, how can I use the homebuyer tax credit to invest when I keep hearing that you have to live in the home you buy? Well, that's true. It is absolutely the case that if you buy a home and get the homebuyer tax credit, you have to make that home that you're buying your principal residence, and you have to stay there for 3 years, or you got to pay the tax credit back. But there's nothing that says that you have to sell your last home. Let's say that you've owned a home for 5 consecutive years out of the last 8, and that you otherwise qualify for the long-time homeowner tax credit, otherwise known as the step-up homebuyer tax credit. Let's say you qualify for that, and you've owned the home for the 5 years. You don't have to sell that home to buy your new home. So you can certainly see a situation where somebody's owned this home for a long time, and they don't need the money from the sale to do the purchase. I mean, that's a big deal because you need a down payment to purchase a home. This isn't 2004 anymore, so you need a down payment to buy a home. If you have that down payment without selling your old place, there's nothing that stops you from keeping the old place, buying a new place, so long as you move into the new place and then rent out the old place. So if you've always wanted to get a start in real estate investing, and the last 4 years haven't dissuaded you from that, and quite honestly, I really do believe that real estate investing is a great way to diversify your portfolio, and I think it's a very solid way of building your portfolio. But you don't need to sell your old house. You can rent out your old place and then buy something new for yourself and get the tax credit, which just gets you a little bit of a jump start toward getting started in investing. Number two, how you can use the tax credit to buy somebody else a home. Well, just remember, if 2 people buy a home and they are not married, they get measured independently. And it does not matter that you're not going to live in the home with them. So let's use the obvious example. Parents want to help their child who's over 18, because you have to be over 18, and that child has to not be a dependent on the parent's tax return. It can't be buying a home for a 10-year-old, because that's what they did last year, and that got everybody in a lot of trouble, so they changed the law back in November. So you can't do that anymore. The child has to be at least 18, can't be dependent on the tax returns. But let's say that child wants to buy their first home. They qualify as a first-time home buyer. They qualify under the income guidelines and all the other restrictions, information about which you can find at homebuyertaxcredit.com. But that person qualifies. The parents want to buy them the home. Well, the parents, if they're not planning on living in the home, they're not going to qualify for any part of the homebuyer tax credit, but they don't want it. They want their kid to get the homebuyer tax credit, and he or she will. As long as she qualifies on all the other guidelines, she buys the home and takes title to the home, she would get the tax credit. Even if she's getting financial assistance from her parents in the form of a down payment or co-signing on a loan, or, heck, they could even pay the whole loan or buy the whole thing for cash. It doesn't matter. They can do any kind of kooky thing they want. As long as she's on the title, she would get the homebuyer tax credit. So that's number two. That's how you can help a child or anybody else. You can help a friend, you can help a brother, a sibling, whatever the case may be. You can help somebody buy. If you're not planning on living in the place, you can give them any financial assistance you want. They'll still get the full tax credit to which they're entitled to. Now, they may have financing problems. I'm not saying your lender is going to allow them to do this, but as long as they take title, they get the tax credit. Number three, how to downsize. A lot of people might want to downsize, get out of the cold winter, move down to Florida, move down to Arizona, whatever the case may be. Well, think of it this way. You can sell your current place and get a smaller place, which would be under $800,000, as that would have to qualify, so long as you are, I should say it has to be $800,000 or less. So let's say someone owns a very expensive home, could be millions of dollars, and they want to buy something and they'd like to get the tax credit, not that they need it if they're selling a couple $1 million worth of house, but just for the sake of argument. They sell the very expensive house, they buy the inexpensive, relatively inexpensive, under $800,000. Anything $800,000 or under, they can qualify to buy. So they buy it, they get the tax credit, as long as their income is within the levels. But for a lot of downsizing couples, they may not have high incomes anymore. They may have a lot of money invested, but the actual income they bring in every year might be below the thresholds, which are $125,000 for a single, $225,000 for a married couple filing jointly. And I can see a lot of downsizing couples who might qualify under the income guidelines, even if they have a very expensive house that they'd like to sell and a much less expensive house they'd like to move into, either as part of downsizing or relocating or something like that. The only key thing is they got to use the home that they buy as their residence. It has to be their residence. The other key thing is, remember, you can take the tax credit off your 2009 taxes. The point is, if they sell in 2010 that house that they have all that equity in, they're going to get capital gains. The capital gains are going to drive them over the income guidelines. But if their income for 2009 was below the income limitations, they can sell the home in 2010, take the tax credit off the 2009 tax returns, even though they have a massive capital gain in 2010, and they can get a little extra with the tax credit for on the home that they do buy for themselves. So that's how you can use the home buyer tax credit to either invest, help somebody buy their first home, or downsize if you do qualify as the repeat home buyer, the long-time homeowner. All those three things, and of course lots of other conditions and restrictions apply. You can check all of them out, including an eligibility test, at homebuyertaxcredit.com. And as always, we remind you, before you do anything, particularly something like this, which sounds creative, a lot of guys who promote a lot of creative things end up with handcuffs with their jackets wrapped around their wrists, being let out of a federal courthouse. So make sure you check. I'm telling you right now, check with your accountant. Check with your accountant. Check with your accountant before you do anything. Don't rely on us. We're not giving you tax advice. Have a great day. Thanks for paying attention.